today, throughout the day and throughout the conference, you will basically hear a lot about some of the things that are happening and what could we see in the foreseeable future. I think the event has been very well organized. As usual, you got a huge audience here with the diversity in terms of investors, issuers, government, regulators, and all that.
I think obviously in terms of what's driving the high yield market, clearly it's the same thing that's driving the general fixed income markets.
In the past, high yield issuers could do a deal in a 5-handle, 6-handle type deals, and this is just as recent as last year. But if you look at where they're paying up this year, which is almost double.
This year, the first 9 months itself, the volume has actually dropped just only 1% from the year-on-year. We had a vast discussion about different topics, and the topics are really relevant to us in today's age.
Asia still remains one of the most stable asset class there.
To say that whether green finance is actually going towards hard infrastructure, that's been a bit limited.
12 months ago, there was a lot of discussion around green bonds. In the last 12 months, we've seen a lot more.
Now becoming, a very credible source of capital, for sponsors of infrastructure projects.
The panel we were on the ESG, the green infra, so it was good to see a lot of pickup on this topics, interest from the audience as well.
China is still the biggest driver in this market. It's still the dominant force.
The changes in the political environment is not just impacting the economy, but also having major shifts in the geopolitical landscape as well.
We are facing a world of heightened economic uncertainty.
It's not necessarily a disaster to the emerging markets.
Besides Vietnam, where we are seeing opportunities in some of these other markets.
I think the One Belt One Road from the China side needs to be a lot more inclusive and open.
Housing finance is always one of the key agenda for the government.
I think a lot of investors do feel that sustainable business is generally good business.
We think the market has come down while the valuation is getting attractive, but we're looking to see further earning cut, maybe in various sectors.
Everyone knows that offshore bond issuance is getting more and more expensive.
The onshore market will provide a more competitive environment from a funding perspective.
The Shanghai A-share composite index has dropped more than 20% year to date.
I think it was interesting to see two separate sessions on ESG. So one on loans and one on bonds. I guess certainly it arouses a lot of people's participants' awareness.
It's all relevant topics, they're current, but the mix of investors and the attendees is fantastic.